Hey guys, it's Big Mike, and like always, I'd like to thank you for being here today. Today we are resuming our Ask Me Anything sessions with FuturesTrader71. They are every other Tuesday, so today July 9th, and the next one will be on Tuesday the 23rd. The sessions are designed to be quick and casual. There's no prepared presentation. We just jump right into questions, and there's a 30-minute time limit. All right, so guys, I'm going to turn things over to FT, and in the meantime, you can go ahead and start typing your questions.
Good morning / afternoon, everyone. So I need to start with a required risk disclaimer. I have to read it out. Trading futures, options on futures, and foreign currency involves a substantial risk of loss, is not suitable for all investors. Past performance is not indicative of future results. If we talk about performance, the information provided is for educational purposes only. Verify the information provided before trading on it.
All right. All right, so we've got several questions here already. Let's start with Do It. He's asking, how do you judge the importance of micro composites versus longer term composites?
Okay, good question. So trading is made up of what are called fractals. Okay, so there's like different lenses that you can look at the market through depending on your time horizon. When it comes to trading in an auction using market profile, volume profile, whatever, the most recent data is the most important. That's the most that's the most recent auction. I think the name was Do It. What Do It's asking is this microcomposite. Microcomposite is just a volume profile that I draw for a specific set of bars, and it generally is drawn to show what happened inside a certain set of bars. Like this microcomposite here is describing everything, that all the volume at every price. So these peaks and valleys here are volume that occurred at every single price from the peak of 1679.75 on the ES September contract all the way down to the 53 low. So what you're seeing here is the volume that occurred throughout. So that is specific to this balance zone, days where the market just chops around itself in balance. On the right is a composite. This is the red's a microcomposite, the blue is a composite. The composite is all volume going back to the date shown here, October 4th of 2011. It's all volume going way back to that time. So it includes any volume that was done. So you can see it's like including the entire everything all the way through. So that's older information. And then so you have the composite, microcomposite, and then you have the intraday profiles that occur every day. So this is today's, this was yesterday's, and so that's what it is. So with regards to how much importance I give to each, it all depends on what I'm looking for. So when do I draw a microcomposite? How far back should my composite go? How much, how many profiles should I draw? It all depends on what I'm looking for. And what I'm looking for all the time, my job as a trader really is to identify what context is and what the market's trying to do. If I can figure out where it has been, what it's trying to do based on the action that I'm seeing, then I have a good chance of trying to predict, and it's just a probability, trying to predict where it might go next. And my trades are being taken to speculate on where it might go next. That's all we do as traders, is we trade some future period. For Mike, the future period is much longer than my future period, because my future period is just looking for, it's just looking down the line maybe at most a few hours. Most of the time it's just a few minutes. I'm just looking for a certain rotation. So depending on what that is, that's how much importance I put on the different profiles. For example, today we traded from, we opened way up here at 45.25, and essentially we're trading the 19th of June. We've gone back and we're trading that day's auction. Okay, so that profile is really important today. So I'm looking at this profile, and if you looked at my tweets this morning, I said I'm looking for a test of the 43.75 early in the session, and that's what happened. It pushed up high, broke the overnight high by a tick, and went straight down to 43.75 before testing the prior day's range. It rejected the prior day's range, so I got long, like long 39.75, and I just got stopped on a trailing stop on this bar here on the pullback to 43.75. It looks like I got stopped at 9:40 and 5 seconds. Yeah, 9:40 and 5 seconds. That time seems off, but it was just a short while ago. And so I'm looking at, for the purpose of this trade, I'm looking at what are we doing versus yesterday, and what are we doing versus the 19th, the last time we were here. Okay, and then the composite just tells me what are we doing versus all the time that I have included in this chart. Okay.
All right, so Bob is asking kind of a follow-up question there. He says, well, he's written something very long and detailed that he's put into the thread, but I'll try to very quickly summarize. Basically, why, FT is a scalper. He focuses on scalping, focuses on shorter time frames. Big Mike talks about how his charts are 100K volume at the smallest. He wants us to compare, why is it that we have different trading styles, and what is, why is there divergence? How important is the style to fit to your personality? Is there common ground, et cetera? So I'll let you answer, the bulk of the question, but I'll just very briefly say that I did scalp for a long time. I guess it was 3 years. And, but before that, for like 17 years, I was a swing trader. So during those 3 years, I just kept crunching and realizing that I really am a better day trader than I am a scalper. So most of my trades today are not scalps. It just fits my personality. So FT, why are you a scalper?
Okay. I knew that about you. I started out as a scalper. It's where my comfort zone is. But I'm not a scalper in terms of what it used to be, say, when I started in the early 2000s. I'm not looking for 2 ticks. To me, every trade starts as sort of a scalp. Like I'm stalking trades. I know that I've known all morning, and in our brokerage chat room, I was mentioning to the traders in there, I'm looking for something to lean on to get long as this was dropping. And I knew all morning that I wanted to get long. So my bias is to continue this trend. I'm trading with the trend. But I'm a fader, so I need a pullback to buy into a trend. I don't trade breakouts mostly unless it's news driven. And so I look for the long. And so I am stalking the long just like I was going to scalp it for, 4 to 6 ticks. And so when I get in, I got in at, let me see, 39.75 at 9:33 Central. 9:33 and 32 seconds Central. That to me starts out as a scalp. I got in right here somewhere. Okay, that to me starts out as a scalp, and immediately I'm looking to lay off my risk. I'm looking to scale out so that I can improve my theoretical average, so my theoretical average can drop below the market. And I've covered that in other videos you might want to watch. So I took a scale at, looks like my first scale is at 40, looks like 42, okay? And so to me, the scalp is done. but it's only a scale. I still have a position on. And the rest of it, I decided to put on a trailing stop. I don't generally use trailing stops, but I put on a trailing stop of 3 points. And it kind of, or 2.5 points actually, and it kind of just trailed the market. And then I got taken out at 10:57, 39 seconds Central, somewhere, 10:57. So somewhere in here I got taken out on that trailing stop on this 2.5 point pullback. So I moved from scalping to a longer time horizon, but my goal is really an average of 2 points per contract in the trade, average. So I'm not quite a scalper, but I'm not quite using a thousand contract volume bar either. But I am looking at the big picture. I have my eye on the composite, which is a daily chart of day session only chart. And I'm constantly flipping back between the 15-3 and the 2500 to see where we are relative to prior days. So I wouldn't call myself a scalper, but ultimately, to answer your question, your trading style has to match your personality. If you're someone who tends to be more slower, calculated, you take your time, you're that kind of a personality, you need to find a time frame that allows you and by the way, if you're slower and so forth, it means you're going to need a lot of confirmation probably, which means you need a bigger account because your stop has to be wider, but then that's compensated for with much bigger targets than I do. I'm not looking for more than, maybe on the outside I'll have a 3-point stop in the ES, and that varies by product. But generally, I'm willing to get in and out, in and out, in and out as many times as I need to secure a 2-point average, and that's how I built my careers, on just taking a lot of small chunks in a lot of trades. And I can afford to do that because I also have memberships and things like that where my costs are not so high. And so it just has to fit your circumstances, your trading style, your infrastructure. You know, if you're on a slow internet connection, or if you have, you know, if you're remote or something, you need to kind of slow things down for yourself, and maybe use daily bars for your trades and so forth. Just remember, futures are leveraged, so if you're trading off of a daily bar, you're putting up. It's just you have to be aware that the market can move quite a ways before a stop's triggered on a daily bar. Things like that. You just have to. It just has to fit your personality.
Right. Emil is asking, how many trades per day do you average?
I've not been as active in the last few months. There are a lot of life changes in the last few months, and I've been out of the office a lot. I've had my kids for the first half of the summer and so forth, so it's hard for me to answer that with recent data. But in a normal environment, I would say I've cut back from doing a few hundred trades per day, which add up to at least a couple thousand round turns per day, maybe 5 years ago or 4 years ago, to now looking for maybe, I'd say 15 to 20 trades a day across several products, and I just don't trade the volume that I used to, because I don't need to, because I'm looking, like I was just saying, I'm looking for I'm more of a bigger picture guy as opposed to scalping for ticks anymore. So I would say nowadays maybe 15 to 20 opportunities.
Okay. Jonathan asking, excuse me, regarding the M6E, the Micro 6E CME FX contract, from your experience, how much slippage should be expected with market orders and stop orders when trading 2 to 5 lots? Is it because of lack of liquidity? And second part of this question, when calculating a normal harmonic rotation with the help of a zigzag study, what settings do you use? And I want to add a third question of my own just to get confirmation from you. Do you recommend that people do any kind of studies or research on M6E, or do they do it on the regular 6E and then simply have the DOM up of the M6E?
Okay. So the last question is easiest, so I'll do that one first. I use the 6E contract because it has the volume, it has the participants, it's liquid, it just trades like a normal product. So this chart you're looking at here is a Euro FX product, and it's the symbol for it is 6E as in Edward. But when and I've traded the 6E, the full contract, but now I'm more interested in the M6E, the micro 6E. So I'm looking at the charts and I'm charting and I'm doing homework and all that stuff on the 6E, but I'm trading the M6E. They follow each other step for step, really. They don't diverge much at all. And there is, so to address the other questions, as far as slippage for 2 to 5 contracts, it just depends on what you're trying to do. If you're going to market on a break, just like it is with the Russell or the Dow, you're probably going to have to give up 1 or 2 ticks on a move. But right now the market is 16 by 16, something like that, with a tick spread, a blank spread between, because it's in its slow phase. It kind of goes deadish around 10:45 Central or 11 Central, something like that, because the European market, cash market, closes. But during the regular session, like earlier in the day when the U.S. market opens, or even before that, there's usually not a spread, and it's about 20 by 20 in depth. So a 2 to 5 contract market order really should not be moving the market at all. It should be filling at the next best price. At worst, you'll maybe lose a tick. But this is not a scalping product. It's very directional. This morning gave us an amazing opportunity. This break here was just screaming lower, and the target I posted was 38.35. And it went to 38.34, pulled back, and it just blasted right through. But it moves. It moves. It's great. It gives folks who've been on simulators or have small accounts, like we recently, because I've been talking about it. We've seen a lot of interest, and especially with our pricing structure on this product. You know, there's been a lot of interest in it, and so we've seen a lot of people come in who have been simulating a lot, or who have been very reserved with their ES trading because of the tick value of the ES, or the leverage within the ES, and are trading the M6E product. I think it's an excellent vehicle to work out your issues at the lowest cost possible. It's good for testing. The data from the 6E is great to do the testing with, so I don't see why anyone would, with a less than maybe $5,000 account, would trade the ES, even if they have $300 margins, which just means that you're using more leverage and are taking much more risk and are likely to not last as long anyway. So go trade a micro contract, I think is the best way to go. It makes your learning curve last. Right. The last part of the question, harmonic rotation with the help of zigzag. I don't remember what I did here, because I do these harmonic rotations on the Russell, on gold, on everything I'm watching. But I generally start with a big number, export the data, and initially I would start with what are called fractals. You see these numbers here. These fractals are just looking 5 bars before and 5 bars after. There's too many of them to show here. They're looking 5 bars before, 5 bars after. So this, or 2 bars before, 2 bars after, and then they make a note of the peak and valley. And what I do is I compute what that rotation is between these fractals, and then I condense that down to end up with a zigzag value. I take the zigzag value and I put it on the chart, just like here. So this is a 7-tick. So every time there's 7-tick move in either direction, it starts to count. It starts to measure what that next move is. That's how the zigzag works. I start out with some number that I get from the study, and then I refine it based on how much I want to see. Like with this volatility, a 7-tick zigzag is too tight. There's too many of them. It doesn't mean very much. But then when the market slows down and trades normally, then 7 ticks works fine. Really, it's more like 14. So I try to find out what the normal rotation is for the product, and then I take half of that. So for the ES, it's 6 ticks because the normal rotation is 12 ticks, 3 points. For this, it's about a 14-tick normal rotation, so I use a zigzag of 7 ticks, okay? Hope that helps.
Yeah, and FT, I know that you've been advocating the M6E a lot lately, and I completely agree. I did a webinar 18 months ago, and I put all the popular symbols together and tried to go over, you know, the daily trading range and the value of the contracts and predict, try to get everybody to realize, because it really hurts me to see all these brand new traders enter the market with no trading experience, and they go straight for crude oil. And, you know, I'm cringing. I'm going, guys, please don't. I mean, the M6E is really, really great. Don't worry about the slippage. It's very minimal. And it's like FT said, it's a great way to get your bearings without blowing your account.
Yeah, and I can tell you this, from the point of view of being the risk manager here at Stage 5, it just boils my blood to see someone go through the account opening process, scrounge together some money, and then just go in there and get stubborn trading gold or oil or the ES. They start, and the people who are in trouble, the most common thing I see, and I know this is not a question, I'm kind of going off on a tangent, most common thing I see is they lose some money in crude, so they trade gold, and then they lose some more money there. Then they go to the ES, and they think, well, people talk, and so they start to trade that too. So all in all, they lose 30% of their account in one day. If you haven't figured your stuff out, go to the M6E, because you can do so at the lowest cost possible. Don't worry about the commission or whatever, because that's nothing compared to the losses that you'll be taking if you don't manage your risk.
Yep. Okay, time for a couple more. Let's see here. Ricky asking, how do you determine the opening type for opening drive, open test drive, etc.?
I think I cover that in one of the webinars on my website. If you go to FuturesTrader71.com, I think it's webinar 1. It's a function of watching how it trades. So each opening type has a characteristic, which I describe in there. And if you look at this morning's open, you'll notice that, you know, it can't be open auction in range. It has to be an open auction out of range, because it's opening out of range. So your options are open auction out of range, open test drive, open reject reverse, or open drive. Well, when it opens and it turns around, forget the open drive, okay? And then if it turns around and it starts to chop slowly, forget open test drive. So your two options are open auction out of range or open rejection reverse. Open rejection reverse can be directional, but not very as strong as an open test drive. And then as soon as it starts to do this bit here, see, watch what happens. See how it's fighting every new low? That's an open auction. It's two-way. It's a two-way auction. So what does that mean, really, knowing what the opening type is? It tells us whether we're likely to go into, and it's just a probability, tells us whether we're likely to go into a balancing day where you can fade the trend, or if there's a driver in the market. If this had one ticked yesterday's high, which was 46.50, the overnight high, it went to 46.75, and then all of a sudden it just explodes downwards, that's an open test drive. Do not stand in the way of that move, okay? And that's what knowing the opening type is for. You're just trying to predict within a reasonable degree what kind of a day you should expect, and therefore know what plan you should be on. Should I be on the pullback, let me sell pullbacks and go with the selling trend plan, or should I trade towards balance, therefore fade new lows plan? If you don't have a plan for each type of market, balanced or trending, then chances are you have a lot of frustrating days. So that's what the opening type is for.
Okay. This next question, I'll go ahead and ask it and leave it to you if you want to answer. Brian's asking, how much size do you trade? And you know, the first thing that comes to my mind is like Rolls-Royce. When they list their horsepower, they define it as sufficient.
Yeah, yeah, I get asked that a lot, actually, especially on these AMAs. It's irrelevant. It's more than one contract, because I'm just a pitiful one contract trader. That's why I advocate the M6E, because you can scale or trade 2 to 3 contracts and still risk, you know, $12 on a stop out. But really, the size I trade is not relevant, because it doesn't matter. It's a function of how big your account size is. So I don't think it means anything. It's the question is, am I trading in a way that makes sense to you? What I'm sharing with you, does it make sense to you or not? Because my size, if I told you I trade 320 contracts per click, does that make what I'm saying more valid, or does it mean that I'm trading a 10 million account that I started with and now it's worth $1 million, but I'm still trading 300? You know what I mean? It doesn't mean anything.
Yeah.
Okay, so don't focus on that.
The better question would be, how many contracts should I be trading? I would like it if people would ask that.
Yeah. I mean, just trade so that whatever size you trade plus the stop that you're defining is not consuming more than at most a couple of % of your account, you know,
right,
per trade.
Okay, so FT, we're at the 30 minutes. I'm going to put you on the spot here, since we haven't done one of these in a while. Do you have a few extra minutes today, or
sure,
you go?
shoot.
Okay,
yeah.
There's still several questions here. So let's see here. Chris is asking, why only day session charts on the composite? Does overnight volume not matter?
So it's becoming more and more relevant, but as you check to see the overnight volume, it really is not significant enough for me to care about it. That's one thing. The other thing is, because the volume is not really there, how valid are the moves that occur overnight? And so the ES is, you know, you just have to understand what a futures contract is. The ES is built on the S&P 500 stocks. The S&P 500 stocks trade, you know, from 9:30 in the morning Eastern time till 4 p.m. And then the exchange in futures gives you the extra 15 minutes to settle out other contracts and so on. And it also gives us an opportunity to trade some earnings. But overall, whatever happens after that 3:15 period and before, or 4:15 period Eastern and before 9:30, really has no basis in the underlying. It has no cash value. The ES is essentially moving in sympathy with something else. I don't really care about that, because I'm trading the futures product based on the issues, the 500 issues underneath it. And that's why it doesn't have the volume. That's why the bid-ask thins out after that time. So I find that it just introduces noise. Adding that information in doesn't change all that much in the volume, because the volume is relatively low, but it creates kind of erratic pricing and erratic looking profiles that don't make much sense to me. Eventually, though, I know I will end up with a 24-hour profile, which creates a lot of complexity, because I define a lot of things based on the time of day as well.
Okay. Chuck is asking, do you trade your own IRA? And I think he's asking how it differs from your day trading account.
Okay, so 401k and IRA, even though we open those and you can trade futures in those, I don't do anything in futures in those in those accounts. Generally, I treat my 401k and IRA almost like a hedge fund. I ran a little hedge fund like family and friends fund, and that's really where it is. It's investing in kind of, I'm doing covered calls in there. I'm doing long-term, you know, staple type stocks. It's not something I use a lot of leverage for. If anything, any leverage I use in my 401k or IRA, it's really for options. Although a lot of people do trade their futures, trade futures with us in their retirement account. But I don't see the point in doing that personally because I need to diversify. A lot of those people have a lot of money in equities and then just trade the little bit of money they have in their retirement account with futures. But for me, it's the opposite. I'm doing a lot of futures, so I need to just keep my IRA and so forth as an equity and option vehicle.
Okay. Crude Trader is asking, how do you handle the volatility after you enter the trade? He says, for me, once he's in a trade, especially if it goes in his direction, then he's looking to get out. And more times than not, he leaves money on the table when doing so. How do you remain calm? And how do you recover mentally after a loss and regain your confidence?
Good question, and an extremely common problem, and also a great topic for a Big Mike webinar at some point. This question of, you know, I got stopped at the high or low tick before it actually moved in my direction, or the question of, gee, you know, I caught a move in oil, I banked 14 cents, and the darn thing went $1.50 in my direction. The goal in trading is not to hit home runs. If you understand baseball, or if you've ever watched it, everybody wants to do the Babe Ruth thing, you know, just get up there with your bat, you know, the big gut, and kind of point at the stands and then swing the bat and hit the ball outside of the park. That is not the business that we're in. The goal here is to take small bites with calculated risk on high probabilities. Take small bites with calculated risk on high probabilities. So the goal is just for you to define how much of a chunk of this market movement. So when we look at oil, it's all over the place. Okay? How much of a move do you want to capture? Define what that is, and then don't care. Don't care where it ends up going, because there's a danger to worrying about how much more it went once you got out, in that it causes you to change the way you trade. And here you are again, putting yourself through another learning loop. If you find that the markets become more volatile, the products become more volatile, and therefore you should be expanding your targets, expect that you should be expanding your stops as well, and then make that adjustment and then stick to it. But if you're moving your targets constantly, moving your stops after you get in based on how it moves once you get in, you're getting smart after the trade has been put in, and chances are when things don't go well for you, there'll be so much randomness that you've inputted into your trading plan that it becomes practically impossible to figure out where you went wrong. So it's better for you to just say, look, pretty much 95% or 2 sigma or 2 standard deviations of all the data of all the rotations that I brought in for oil, pretty much 95% of them are 12 ticks. Then that's my goal, is for every trade I'll take 12 ticks, 12 cents in crude. That's my goal. And then my plan then has to have in it a way for you to have many opportunities throughout the day. The goal is not to come in, catch the low, get out at the high, and feel like a superstar. That's not the goal. The goal is to just take chunks if you're trading intraday. If you're like Mike and you're using some enormous volume chart and you're looking for several days, then you need to define that over several days. You're stop's going to be wider, your target's going to be wider. But just be satisfied with where you are. It's a lot like learning to be a long-distance runner. There's always some Nigerian or Jamaican guy who finished the race in like half the time you did, okay? But the goal in running a marathon is to be able to finish without destroying your joints, and so that you can recover in time for the next marathon. Just go at your own pace is what my point is. Go at your own pace, define what that is, and stick to it. If you start to look at what could have been, what should have been, that's the greed factor coming in, and then you'll find yourself changing how you trade all the time. And I'm not supposed to say guarantee. I set off alarms at the NFA when I say the word guarantee, I think. But I almost guarantee that if you create that variable in your trading all the time, it creates an environment where you just don't know what part of your plan is working, what part isn't, why you're making money. You know, can you describe to me why you're making money now but you didn't last week, even though the movement is similar? Don't do that. Just define what you want. I've defined what I want in ES. My goal is to come in, take it consistently at a calculated risk, and then just wait for the higher probability trades, because I have a goal, have an expectancy goal. At the end of the week, I want to be at this expectancy goal, period. And so if in my plan I have to do it with 2-point average per contract trades. And if I don't see a trade that gives me that, I will not take it, because I have taken those trades and they have cost me dearly. You don't have to put yourself through that. So don't worry about what you left on the table. Be thankful that you have followed your plan and you have executed, because that's what builds confidence. And with confidence, your mind starts to open up and you start to see things that you otherwise did not see because you have confidence. It's happened to me in the past where I come in, and I'm not gloating, but I come in and I just cannot do anything wrong on any trade, because I'm not thinking about how to trade. I'm not thinking about why I'm trading, when I'm trading. I'm just executing some habit that I've been following for months and months and months. And I've had multiple 100% days. And it just happens for you. And that's what your goal is. Your goal is to get to the point where you are intuitive, where you are just executing. It's where the rubber meets the road in trading, execution. So take your piece and move on. Take your piece and move on. Don't worry about what you're leaving on the table, because crude will drive you nuts.
Right. Yeah, one pattern that I see over and over again, and it's very hard to watch on the forum and journals and such, is they'll have a couple of stops, and then all of a sudden they change their method to where like they have this much bigger target now for the next trade. You know, it's like revenge trading. It's, you know, and then you haven't done research on that target. It's not going to work most likely, and you know, it's just you got to be consistent and not let any single trade derail you, right?
Yeah, and it's always done at the worst time. It's like this moving a wider stop, bigger targets. It's always done when that's when you have to stick to your plan to see it through. Most of the time there is no plan. Almost all the time there is no plan, I find. There's just not enough study done to figure out what it is you're shooting for, you know?
Yep. Okay. Let's see. A couple more questions, then we'll wrap it up. Mark is asking if you've done any type of research and analysis on market profile versus volume profile, specifically the different profile shapes due to the amount of time spent at a specific price versus the amount of volume traded there.
Actually, I beat that one to smithereens when I started to discover that I just did not want to do any market profiling anymore. I'll show you an example that's right now occurring. Look at this profile. The market profile is the letters. We have 4 TPOs across from 46 down to 44. But look at the volume profile. The volume profile shows us that this top 4 TPO range had much less volume than what happened at 44. that detail is completely lost in market profile. And just because we spent time at a price does not mean we did a lot of volume there. Generally, there's a correlation. I'd say 90% of the time there's a correlation. But I want to know that there's this LVN here that should show up as a single print, but it isn't. So this is a lot like trying to trade intraday, but the best you can do is 60-minute bars, you know, and it's if I can see a little bit more, that's what I'm doing, and that's, you know, I did a lot of exhaustive research on that, and it's just not something that I feel I need to do anymore, because, you know, with the technology we're able to see each and every contract that traded at each and every price. So I want to know that information because it defines the level of interest or disinterest at any given price. Okay?
All right. Sever, I hope I've pronounced that correctly, is saying that, I think he's saying that he's watched the videos, the series that you have on your website, FuturesTrader71.com, and he's tried to understand, but he just can't. Do you get that a lot? Do you get a lot of people that are saying they just don't get it?
Actually, because, you know, the videos are done for donation, I've never limited the number of times somebody can watch those videos once they donate for them. So what happens with a lot of people is they generally watch them, and it's like a blur, because when it comes to trading, I tend to be a bit of a fire hose, kind of drinking out of a fire hose type thing. I'm saying a lot, I'm sharing a lot of information. But I suggest you just look back through and just watch them again. I've never been asked, you know, hey, I've watched your videos, I don't have a clue what you're talking about. But, you know, I would watch the videos again. The bottom line is, the goal is for you to understand the true reason why price is moving in the market, why the auction does what it does. That's just the most important thing. So watch the videos again. If you still have trouble, then go to my website, FuturesTrader71.com, and go under resources and go under books. And then get a book called Mind Over Markets so that you can understand it at an even more kind of basic level, and then come back to the videos and see them again.
Okay, let's see just a couple more questions, then we'll stop. So Bob's asking, there is no such thing as a micro ES. Actually, the ES is the smaller, right? So what to do in that case? Should you trade SPY instead of ES?
Okay, Bob, I have been pushing the exchange for a micro ES, and we're going to get it. We're going to get it. It's just the CME is like a big ship. It doesn't turn on a dime. So we're going to get it. I've been pushing for 1/10, just like the micro FX. It's 1/10 of the full size. But at a minimum, it looks like we're going to get a 1/5. So between the big SP contract to the ES, the ES is 1/5 of the big. The micro's likely to be 1/5 of the ES. But we just met with the CME yesterday, actually, to push that along. So hopefully that'll be out, you know, in the next few months.
Right. And RT's mentioning, you know, trade the Dow or the Nasdaq, and you know, if you guys go back and look at the webinar I did about 18 months ago, it's called Where to Start as a Trader, and went over all the different products and laid all that stuff out so that you can, you know, a lot of those products do trade very similarly to the ES at much lower dollar per trade risk. So you can check those out until we get the micro. All right, let's see if there's one good final question. Well, there's several questions here, guys. So I'm gonna just say that if you did not get your question answered, there's a thread on BMT. You can just do a search for AMA space FT71 and type in your questions there. We're already 15 minutes over, so I think this is as good a time to stop as any, especially since we're trading new highs right now, and I'd like to get back to that.
Okay. All right. Well, thanks for having me on, as always, and thanks, everyone, for listening in.
All right. Thanks, FT. I'll see you in 2 weeks.
Take care.